Good afternoon, and markets are staying fairly volatile in here. It seems like they're finding more of a range, maybe wheat putting a little bit more of a low, and this bean market had a nice rally as it's pushed towards $15. But as we end up looking towards the end of 2022 and focusing on 2023, we think it's really important when it comes down to making marketing decisions is to take a step back and look at the big picture. And if we're going to pick a couple of things to look at, we should look at weekly charts, and we should look at both U.S. and world ending carryout levels. So here are a few things to consider in here right now. Here's the corn stocks, over the last 3-4 years, and here the orange line is the world corn stocks. The blue is U.S. corn stocks, and as you can see, back in 1920, we had U.S. stocks just under 2 billion bushels, and we had world stocks over 12 billion at that time. As we fast forward to 2023, we've brought down world ending carryout levels to below 12 billion bushels and U.S. carryouts around the 1.2 to 1.3 billion bushel range. So now as we look at a weekly chart over the last 4 years, take a look going back to 1920, we really had corn in a range from 3 to 450. The bull market of 21 and into 22, now we've seen this market trade in more of a $5 to $8 range. And if you take a step back with futures at 650 in here right now, we're really at the midpoint over the last couple of years. Now is our carryout level going to come down enough in here right now to push up towards the higher end of the range, or are we going to increase and push back to the lower end of the range in here over the last couple of years? That's the big question as we move ahead. Our thinking is that these numbers aren't bullish enough that we need to accelerate higher in here, but a good crop in the U.S. is needed next year before we're going to trade down to that lower end of the range. Looking over at the bean side of it in here, you can see the world ending carryout was almost 3.5 billion bushels back in 1920, and if the USDA is correct, they'll push above 3.7 billion here this next year. On the other hand, though, U.S. carryout has gone from 525 million down to 220 million bushels. You have a little bit of a mixed bag right there. As we bring up our weekly charts, looking back to 1920, the market was in a relatively narrow range between $8 and $9.50 a bushel. I mean, we traded $1.50 almost all year. We'll trade $1.50 a bushel in 1 month's time frame right now. Now, the last couple of years, we've been in a 12 to 17.50 range. And if you look at putting that more towards the midpoint in here, you're looking $14.50 to $15 about where we're sitting at. Now, the big question as we move ahead, and when you look at the supply-demand tables, is there enough there to justify a push to the higher end of the range? Should we rotate higher, or is this thing going to roll down? Now, that's the big debate as we move ahead, but when you look at the world carryout levels, this is why we're a little more defensive on beans and pricing beans out compared to that of corn and wheat. Getting over to the wheat market here, you can see the world carryout levels have been on a gradual decline over the last 4 years. U.S. carryout levels have been going lower as well. Bring this up to our weekly chart in here right now. You can see since 2019, we've been on a solid uptrend, and then the war in 2022 is what caused all the volatility and taking us basically from $9 up to $13 on wheat. Now, as we want to wrap things up in here right now, and you can look at the price ranges over the last couple of years, I think if you want to be bullish when you look at world and U.S. carryout levels relative where price is at, you probably should be a little more positive on the wheat market looking ahead. On the other hand, if we're looking at a commodity that can all of a sudden we can overproduce in a hurry, I think beans look like that could be the case in here. And if we end up rolling to the lower end of the range of the past couple of years, we think beans would be the one that would fit that way. Corn to us seems like it's caught a little bit in the middle. So planning ahead on making marketing decisions, this is a big reason why we like being aggressive in pricing out old crop cash beans and getting new crops sold. We're the most patient on wheat and want to continue to grind along on the corn sales. If you have any suggestions for an upcoming webinar, things you'd like to see on this or on our daily report, please let us know. Have a great day.